Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, October 17th. Today, we got retail sales better than expected, 0.4%, and we were expecting 0.3%. Coming from the 0.1% means that the consumer spending is still there. The consumer still is strong. Apart from that, initial jobless claims and continuing jobless claims came a little bit lower than expected in both terms. So these are both two checks in the right direction. Then we have the business conditions from the Philly Fed skyrocketing to 36. Employment is the only thing that was really bad for today, minus 2.2. New orders on the positive 14, industrial production in the negative, industrial year over year, manufacturing production, all these numbers in the negative means that the economy is slowing down. But at the same time, retail sales, which was the big data for today, it's pretty good, 0.4%. So let me just go through the chart and explain you why we have such choppy market. Because basically after yesterday's big sell-off, not big sell-off, excuse me, and Tuesday, since Tuesday, excuse me, we've been tracking this zone that, as you can see, it has, I'm repeating myself over and over. We are still in this inverse fair value gap, rejecting and rejecting and rejecting, and there's also even higher time frame in here. We have the inverse fair value gap on the weekly, which is being rejected. So this price action is not easy to trade, but we have to be really careful. The first thing that I notice is that on that day, we have this week that on the consequent encouragement right here that I was tracking. But oh boy, during the overnight, something happened, which basically is that TSM reported earnings. TSM is 11% today on a boom on demand from AI chips. SMH, the semiconductor sector, is 3%, AVGO 4%, ASML 2%, ARM 3%, Micron 3%, NVIDIA 2.72, a little more choppy, but today it's all about TSM and the boost in expectations for more AI demand. So the Nasdaq skyrocketed during that moment, as you can see here. I didn't have a good entry because we basically went through the roof. This was a setup, but didn't cover my risk as I wanted, because this was 24 points for basically a retest of this 51 to 1 to 2 rigorous ratio. I mean, right now I'm at a point in my career that I want better risk. I want better risk. Even though maybe some opportunities I will miss, I want better risk. Like, for example, this one. This one was the take of the BSL, buy-side liquidity. Then we got the fair value gap, and I was tracking 20,500 right here. Let me just put it right here where was my target. And I was just, sometimes you are lucky. I took this knife to the downside. I took this breakout. So basically my entry was in this candle, and I was risking exactly the low of that candle. 5 points for 25 points is basically a 1 to 4. It's 25 points. It's $500. It's not a lot in my terms, but still $500 for 5 points. So 100 risk, $500. I will trade this every single day because this is risk management. So basically we tapped to 20,500 and we continue. Last week high, we pushed until when? We pushed until Tuesday's 15-minute fair value gap. We couldn't even tap the 50% of that level, and we in the open, since the open, we've been selling off and selling off and selling off. Right now we are trying to hold, we are trying to recover a bit. We are still quite a lot in the positive, 0.65. But let me tell you, let's go to the 1 hour because we are still in this area. Rejection here, choppy price action, push higher, rejection here, and then rejection here. And let me tell you something. Imagine that you have this range right here. You push up, and then, let me just put it. You push the range up, and you reject pretty heavily. What is this becoming? This is basically a Wyckoff manipulation move. If we continue being below the daily fair value gap, 50% consequent encouragement, and below this level of 500 to 550, I would be considering this a big manipulation portion, and I would expect more downside. I think the economy is strong. I think the semiconductors and the AI boost is incredible. But this price action does not give me too much confidence for a big push higher. And the ES, it's really rejecting their all-time highs the other day. So we quickly rejected that. We went through the pivot, we went through the 15, and we established a new all-time high, but we are rejecting that. So I don't know, guys. The ES was the strongest one, and maybe if the ES was like pushing, I could make my mind towards not manipulation, but this in the overall in this 1 hour time frame, this is still bullish, still a lot of sentiment put in here. We are still maintaining these lows, but if we continue rolling over like this and putting lower highs until these lows down here again at 20,200s, and we retest again this 15-minute, I don't know about you, but I would be quite scared about more weakness to come. So let me just remove that, remove the buy side liquidity, remove my trade, and try to establish some kind of framework that can help me really understand what are the key levels that I want to see. On the 1 hour, it's clear that this zone in red, it's pretty much no trading zone, unless big news, big catalyst, or things like that. If we go back to the 15-minute chart, we can see that since the open, we are in the red, 0.45. So the only thing that is holding, it's basically this fair value gap that we have here on the first move higher. It's pretty clear that we are holding. There are buyers here, but there's also big sellers here. And not only there were there, and there were here also. So I think buyers would have to really push heavily and reach this zone up here at 600 plus to really give me the confidence, evidence of the buyers are stronger than the sellers. Right now, we are in the middle of the no trade zone. I mean, it's quite a hard rejection. More patience, more discipline to come. Tomorrow is Friday. Be really careful. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recap. I appreciate your time as always. Remember that the trading day is not over yet. Tomorrow is Friday. Today it's another nasty day of rejection, of extreme volatility, and it's just chop, and we know that. We knew that this was going to happen because of this range. So we are in the middle of a lot of head resistance. So be patient, be disciplined, manage your risk, and wait for better opportunities. That's all. They will come. There will be better opportunities, more opportunities. Don't lose to FOMO. Stay safe, everyone, and see you tomorrow.